So how should one read into today's late rally? Short covering, nothing more, nothing else, or this is beginning of a new uptrend? Let's discuss that with Prakash, Manishi and Ashwini. Ashwini, good evening to you. Let me kick off the discussion with you. What do you make of today's late rally stroke late recovery?
Well, I would think that today basically shows what the rest of the year is likely to be, where you broke down yesterday, came down by 25 points, today went up from the lows 30 points. So basically a lot of choppy action, sideways action, and instead of expecting another 25% this year, this is the kind of action you should expect. Buy when the market is 5% lower, sell when it's 10% higher. It's now becoming that sort of a market because clearly we are not getting incremental momentum, and from here maybe it's a bit more worthwhile trying to wait for a solid decline to get in, because keeping on buying above 6,000 is not paying off anymore as it was. If you went on buying at higher and higher levels, you always found the market higher. But in this leg, clearly above 59.70, which was previous intermediate high, the market is finding great difficulty in moving higher. Though bias remains positive, a lot of stocks are moving up, but the overall market is lacking leadership and is unable to get a firm direction.
Well, yes, in the last 2 days, we've seen a lot of volatility and a lot of back and forth movement. Prakash, what is your understanding? Do you think the big move of Jan is now behind us, and for next 2 or 3 weeks we could see a lot of volatility and a lot of back and forth activity?
I wouldn't say the big move is behind us, Nikunj. Very clearly, in fact, we are in for higher IVs and higher swings, and it's going to be more of stock specific focus activity as we get into earnings season. Look at particularly the likes of Reliance. What's happened to Reliance the last 2 days. 2 days prior to that, it was absolutely unassailable, and 2 days you suddenly see it lose all its sheen. So you're going to have these kind of stock specific volatile swings, but it's definitely an opportunity market which offers a lot of opportunities, particularly in the broader markets, and I think that is what would continue. As Ashwini said, you would have these opportunities to make money in pockets, and not very large in terms of quantums, but quite frequent of those.
Manishi, Indian markets are knocking on the doors of a new high. What is your understanding? Do you think the best part of the rally is behind us already, or still big money could be made in this year?
Well, yeah, when you say that it's knocking on the doors of a new high, it may be close to a new high in absolute terms, but it's clearly nowhere close to a new high in terms of valuation. When it touched those 20 or 21,000 levels, I think in late 2010 and before that in 2008, the earnings base on which we were working on was totally different. And from the 2010 levels, we are possibly working on about 25 to 30% higher earnings base. So what appeared to be about 17 or 18 times PE at that point of time is only about 14.5 to 14.6 now, which is still at a discount to the long-term average, which is about 15 to 15.1. Now, I'm not saying that this would clearly go back to that long-term average and possibly stay there, because the earnings growth environment is relatively muted compared to what we had seen previously. Over the next couple of years, we are possibly likely to see about 12 to 14% earnings growth environment in India, compared to a long-term average of about 16 to 17%. So possibly the valuations will remain here.
Prakash, if markets are confident that in the near term economic recovery is round the corner, Reserve Bank of India will cut rates and earnings have bottomed out, why are cyclicals underperforming? Reliance and L&T, these are two stocks which are heavyweights and they are perfect proxy to Indian economy.
No, I know this is something that possibly befuddles a lot of us, particularly when you see a lot of downgrades being announced for a stock like L&T, and that too when the government is at the cusp of pushing reforms to make sure that the investment cycle finally takes off. But these are times where a lot of apprehension stems from the fact that the government has very little time to get its house in order. Suddenly you have March, which is just around the corner, the budget, which is just about 8 weeks away, and things kind of start looking, a bit difficult for the government to, get into order. And that's where, if the investment cycle doesn't take off, you would see all these cyclicals kind of take a setback in terms of the expectation that are built over December. But I think we would be able to see these wrong expectations getting belied, and there would be a favorable outcome very soon. It's just a matter of 1 or 2 good days and the mood could change dramatically.
Manishi, jump in on L&T. Are you equally puzzled?
No, not really. If we look at the last quarter, that is the October to December period, L&T moved up very sharply and outperformed the market handsomely. So I think there's a bit of a catch-up that's going on. It kind of anticipated this expected recovery in investments, which is not yet a given right now, but possibly it could happen in the second half of the year. In fact, all across Asia now we are arguing for a moderate enhancement in investments, possibly in the second half of 2013. I think the most recent news flow, which is GMR terminating the contract, that could also have a rub-off effect, and that is possibly in the very short term. That's what we are seeing in L&T. There's a rub-off effect there. And, I think if the valuations become slightly more attractive on L&T, maybe, at about 1450 to 1500, those levels, you would possibly see buying interest coming back there. Because ultimately, if you want to play investment recovery and industrial and capex recovery in India, L&T is the best proxy. Not only does it have execution capabilities across different subsectors, its balance sheet is also deleveraged. It's hardly about 0.2 to 0.25 debt to equity ratio, which enables it to increase leverage and bid for new projects. So I think those considerations will come back once the valuation declines slightly.
Okay, now let's discuss the stock of the day, and that clearly has to be Reliance Infra. In quick time, most of the ADG group stocks have appreciated. Some of them have also appreciated a good solid 100% plus in a matter of less than 52 weeks. Reliance Infra is up by about 20 rupees. That's roughly 3.5% for this year. Ashwini, Reliance Infra, hot air, or you think that stock has genuinely bottomed out?
Well, Reliance Infra is a stock that's extremely sideways and it has large swings. So, Reliance Infra on the downside, I think the levels are around 440, 450. On the upside, it's found resistance around 575, 580. So, for the moment, I think it's extremely sideways because of L&T is breaking down. I don't think Reliance Infra will, lead the market higher. Another $15 and maybe you should take some profits if you got in around 450, 470.
Ashwini, there's one data point which has puzzled me and which is still puzzling me, is the fact that global volatility is almost at a historic low, but the dollar index is up 4 days on the trot now. If I try and map both these data points, it's difficult to connect them.
Well, that means that there is complacency globally, and any kind of bad news could again lead to a swing down, and the dollar will start strengthening above levels of 80, maybe move to 81.50, 8200. Because what I hear even locally is whether we can go up 5% or whether we can go up 20%. That is the debate. The debate is not what is the downside. So, these things, once complacency sets in, till it continues, everybody is fine. But, once you get some kind of bad news from Europe or some other place, you could lose, 5 to 8% fairly in quick order of time. So, till, money printing continues and there is, global risk on, we will hang around 80 on the dollar index. But as soon as there is a whiff of bad news, chances are the markets will come tumbling down and the dollar index will go beyond 81, 82.
That's a great point. Prakash, would you agree with Ashwini's assessment that there's too much of global complacency which has set in? The fiscal cliff has got averted, but there is still no consensus on the debt ceiling. There is still, no consensus on how U.S. lawmakers, they plan to kickstart U.S. economy. Do you think in the near term, markets, they should worry about the sequence of events and how things will pan out when it comes to global economy?
Oh, absolutely. Look at what's driving our markets. It's purely driven by liquidity. I mean, nothing much has changed between last quarter and this quarter. We're talking about the same kind of pattern on earnings and expectations on the current account deficit. What's changed is liquidity, and if that were to stop, and that tap would stop any time if you had a leakage in Europe or if you had a blip in US, we've not only global complacency. Look, it's very clearly we've kind of got over some of these issues which are much larger, and there's a lot of patchwork solutions that have actually thrived. Even the fiscal cliff issue has got resolved in a way which is very patchy, and it could actually start cracking again if things were to go bad. So my sense is we need to look at very clear uptick on the investment cycle here. We need to move from consumption to investment if we have to safeguard our economy and our markets. But depending on global liquidity, just because there's a risk on mood and which could change, which is so fickle, I don't think we should look at very high levels.
Well, that's the biggest risk to my mind as well, that the event risk is not over and there is too much of complacency which has set in. Volatility in the incoming days could only go up and news flow is unlikely to improve. But in terms of local triggers, Infosys Q3 numbers are due on Friday, and most of the local brokerages are of the view that Infosys this time around with their Q3 numbers will slash their full year guidance. Manishi, what are your thoughts?
Well, I mean, I wouldn't comment on exact numbers that we are expecting. I mean, Infosys has actually been a bit of a laggard in the IT services space. If you look at the last 2 or 3 quarterly results, there has been disappointments, while its compatriots, particularly TCS, has been surprising. And in the IT services space within India, we currently have an overweight. And one of the reasons for that is we think that over the longer term, maybe not immediately, but over the longer term, the orders towards the Indian IT companies are likely to increase because the US companies, which are their principal clients, they are generating massive amount of cash. If you simply plot the cash generated by the US companies as a proportion of US GDP, that's possibly at a 40-year high. These companies are operating at about maybe 60-65% capacity utilization. Therefore, there's no reason for them to invest in their own capacities. They would rather invest in productivity improvement, which means IT investing, and that's where the Indian companies come in. So that's the broad macro picture that will possibly play out over the next few years. Within that, we actually prefer Wipro. That's our top pick within the Indian IT space, followed by TCS and Infosys. That's the pecking order. And I would also like to point out that as long as our current account deficit remains high, the currency would be under pressure. So I think that's also kind of a short-term tailwind that's working in favor of the IT services sector.
Ashwini, Unitech. I know it's a stock which is not loved by a lot of institutional investors and traders, but we cannot ignore today's price action in Unitech. It today closed at 38, up 6.5% for the day.
The last intermediate high was around 38, and given the way things like DB Realty, etc., which were in a similar situation, have moved, chances are that Unitech, once we settle above 38, we are going to have another 20 rupee move, which basically takes us closer to 58 to about 60. So on declines, Unitech has after a long time become a buy, as most real estate stocks have, and it seems to be a consistent theme. Maybe it is a passing phase, maybe it's a giant pullback rally, but for the moment, these mid-cap beaten up real estate stocks look positive.